Hello again, everyone. In this technical analysis of the stock market video, I call it bull trap because that may be exactly what just happened. Now, no one knows for sure what this market's going to do. And in this video, I'm going to talk about multiple scenarios for the S&P 500. We're going to focus on the SPX. And I've been talking about multiple scenarios with my insider members for a long time now. Okay, I have a preferred count. I have a preferred scenario. It's to the bearish side, but there are multiple scenarios here, and we're going to talk about some of those. So we had one heck of a week. Let's take a look at this. So here's the picture on the daily view on the SPX, and this is kind of what I call my traditional technical chart pattern type of view. I've got the moving averages on here. The 10 exponential moving average is the blue, the 21 simple, the 55 simple, and then I've got the Keltner channels, which are the lightly dotted lines in here that I've got around the price action. Now, this dotted line is what a whole lot of people have been focused on for a long time. I mean, a lot of people. Okay, I'm not the only one. This 2800 to 2817 was really thought to be very, very strong resistance. And sure enough, we come up and tested it February 25th. And again, we came back up into it on March 4th and got repulsed. And then we attacked it again for a sixth time. Well, we attacked it for a third time, but it's literally the sixth time we were in that area. And we punched through it. So now, when did we punch through it? That was Monday, Tuesday of this week. Then we pull back. Let me zoom in a little bit, okay? Then on Wednesday, we pulled back a little bit, and then we took off again on Thursday. And I got to tell you, I'm sure there were a lot of people on Thursday thinking, here we go. We broke above this resistance area, the resistance zone, and here we go. Full speed ahead. And then all of a sudden, we hit Friday. So Friday, it was down, pretty big move, 54.17 on Friday. Is that right? Yeah, that's right. Because it was a big move on Friday. We'll take a look at the weekly chart. Now, here's what I'm seeing on the RSI. I use a 10-bar RSI, and we're getting very distinct bearish divergence in here, okay? Now, I usually like to see it also on the DI+, which is the green line, which correlates with buying, but we're not getting it. So I like to see it better with having both of those confirmed divergence. Let's take a look at the weekly view. Here's the reversal candle that took place this week. We were down 21.77 for the week. So reversal candle, potential reversal. Again, I always say that because you need continuation. You need price action to confirm that it's truly reversing and coming on down. Now, if you're really, really aggressive, you'd sit back and say, okay, well, I think it is, and I'm going to bet to the downside. Well, then where do you got to put your stop? You got to put your stop above the price action for the last week. Okay, so that's just the way it works. All right, so let's take a look at an Elliott Wave view. Let me go back to the daily and we pull up the Elliott Wave count. This is my preferred count that I've been in for a long time. This is my bearish view. This is an expanded flat. This view says that this market peaked on September 21st in the S&P 500. New York Composite peaked in January. The Dow peaked on October 3rd. So here's the view. And that we came down, had a wave 1 in here, and then what we're doing is we have a 3-wave, a 3-wave, and a 5-wave move. It looks like 5 waves complete. We will see, and then that would complete the C wave in here, and then the next move is to the downside. So this is the picture. Next move is to the downside as a part of wave 3. We could have started it on Friday. And again, how do you know? Well, you keep watching the wave count, you keep watching the price action. All right, let's take a look at the bullish scenarios. Okay, the most bullish scenario would say that we've had a zigzag, a wave 4 zigzag, that the high back up here in September was intermediate wave 3 and not a 5, and that we came down in a zigzag for the end of wave 4, which I don't really like, mainly because it's a very shallow wave 4 when I compare it to wave 3. How much did we retrace of wave 3? It's very shallow. It didn't even get to 23.6%. Okay, but let's assume that this is accurate, that this is wave 4. Well, then that means we are off and running in a wave 1, and this would possibly imply that wave 1 is complete with 5 waves up, okay, that it's an impulsive move. Well, then what's coming next? A wave 2 pullback. Typically, you work for a wave 2 to be 50 to 61.8 retracement of wave 1. Or what else could this be? This could be that this is a flat. It could be that it's a flat, that we had a 3-wave A right here. See this A? That's what this would be. You'd be looking for a 3-wave B, and then you want to get a C. Okay, and the C will be a 5-wave. Okay, so that's a very real possibility also, if this is a 4 that's moving sideways. Okay. The other thing it could be is it could be a triangle. We could be, because in triangles, Elliott Wave triangles, they're all 3, 3, 3, 3, and 3. Okay, so again, we got the first 3, but we need to see the second 3. We're not really seeing it. That's the frustration that's really a little bit puzzling in here. If this is doing some kind of B wave in either a flat or a triangle type of pattern. You know, when you have a flat or you have a triangle, you know, it's a sideways type move. It's going like this, okay? A zigzag is considered to be a pullback, okay? So anyway, that's the picture. I would lean towards a triangle, actually, because, you know, if it's not a flat and we have a wave 4, I would lean, that we're working a wave 4, I would lean towards a triangle, mainly because I already have intermediate wave 2 as a running flat. Okay. Let's take a look at, we talked about the scenarios. Let's take a look at I want to look at the VIX is what I want to look at next. Okay, so the VIX really exploded on Friday, and we had a little bit of an instance like this back in the first week of March, okay, where we got a pop, looked like it was going to turn. We got a little bit of a moving average cross, and then it quickly failed. So we definitely need some continuation in here, but this is the biggest, strongest move that the VIX has made in quite a while. You can see the size of this candle. It's 3.9 points from high to low. I don't think, well, we may have one here. This is 3.6. And so it's the biggest one, since when you go back over here, this is 5.48 on the down move. The other thing I noticed on this is we're closed almost right on the 55-day moving average, okay? And we traded above it during the day. We hadn't traded above the 55 since January 23rd. We haven't closed above that 55-day moving average since all the way back here on January 3rd. So this is a big move. You know, the other thing I could look at, and I hadn't really done, is to look at a trend line across the top in here. And I would say we're kind of right there. If I draw that out like that. Okay. So, you know, it would be interesting to see if we break that trend line and thrust up through it, we could have something in terms of a move coming. But we are a little bit oversold right now. Let's take a quick look at that. Okay, this is a McClellan Oscillator for the New York Stock Exchange. I also look at it on the NASDAQ, and right now the reading on the McClellan Oscillator is minus 104.92. So what does that mean? Well, when you get to minus 150, that's considered to be a level of extremely oversold. And you can see we've had instances of that here in the fall and in December, a little bit at the beginning of March. Came all the way back up into the neutral zone. This is the 0 line. Up here is the plus 150. Okay, so plus 150, minus 150. This fluctuates back and forth. This is based on advancing and declining issues on the New York Stock Exchange. And then it does, it's a calculation based on moving averages of this. And I really like it because it really gives you a feel. And right now we're definitely coming down. We're oversold. We're not extremely oversold. So can we get a lot more selling? Absolutely. I mean, we've done that before recently. So this just gives us a picture of where we're sitting with the market right now. All right, that's it for this weekend. If you felt like the video was helpful, hit the like button. And if you're not a subscriber, hit the subscriber button. And hit the little, I think there's a little bell signal or something like that. You'll get notified when I post the new videos. And if you're would like to get more information, would like to see you and become a member and see what I provide to my insider members on a daily basis, going over to joehenches.net. beyondthechart.com or joehenches.net, and that will get you there also. Let me take you back to where we started. So here's what I'm talking about. That's the website URL, joehenches.net, and check out what I've got for you over there. All right, everyone, have a great weekend and a great week. We'll talk to you on the next video.